Merry Christmas and season's greetings all. Welcome back to Finominal UK for our final portfolio review of the year. So for our final review, we will be taking a look at the Invesco Managed Adventurous Growth discretionary model portfolio, where this is one of 6 of Invesco's discretionary MPS portfolio, this being the highest level of risk. Just to note the portfolio's objectives, the portfolio aims to provide capital growth over the long term with a risk target of 90 to 120% of global equity volatility. Invesco also notes this may include emerging market equities, and they seek to diversify sources of return across global regions and investment approaches by investing in both active and passive funds. Just a note on their MPS charge, 0.1%, so about standard for an MPS charge, and OCF fees of 0.55%, so not overly expensive, but also not cheap is what I would say. And looking at the fund manager's selected benchmark, we can see this portfolio has been tracking quite closely to that benchmark, though they note a CAGR since inception for this portfolio of 13.85%, which has slightly outperformed their selected benchmark of 13.49%. Let's look now to those underlying holdings, and this is as of October 2025, where with these underlying holdings, I was then able to head over to Finominal, create portfolio, and then upload those holdings we just saw. So I've already done that, so we can then continue with this independent analysis. But just to show you some new features that we've got on the dashboard for Finominal, we now have a few new tabs you'll see, so we can click Performance, where we're able to view all of our portfolios short, medium and long-term performance, as well as the corresponding Sharpe ratios and max drawdowns, and can also sort by any of these metrics shown here. Can also go over to Outperformance and see how each of your portfolios have outperformed in accordance to their selected benchmark which you set, and you do this at the wrapper level. So you just go into your portfolio, select Edit, and then here is where you would select the benchmark as well as underlying benchmark holdings. Now this is interesting for this next tab I will show you, which is View Holdings Performance. So I'm going to select the Invesco Managed Adventurous Growth Fund, a portfolio should I say, View Holdings Performance, and then I can see how all of those funds, underlying funds, have performed over the short, medium and long term performance. But let's continue with our analysis now. Just before we head over to the portfolio analyzer, let's actually look how the Invesco's Managed Adventurous Growth funds have performed in accordance to their benchmark index. So do note we've got an inception date around 3 years ago. So let's look at 3 years. And overall, the actual statistic here, I believe, is 53% of the funds have actually underperformed against the benchmark index shown over a 3-year time period. So that's something to initially note for this portfolio. But let's now continue with this analysis. Let's go over to the portfolio analyzer, where we can see the selected benchmark as well as the platform's suggested benchmark is the benchmark UK Global 80/20 Aggressive. So this is one of Finominal's own platform benchmark portfolios, which is simply comprised of iShares Core MSCI World UCITS Pound Hedged 80%, as well as iShares Core UK Gilts UCIF Pound 20% weight as well. So a standard 80/20 portfolio benchmark, which based off of Invesco's published CAGR of 13.85% since inception. If we compare this to our benchmark, we can see this portfolio has actually underperformed on CAGR of 13.85 versus 17.2% for the benchmark. Now let's continue with this analysis. We can see the Invesco's portfolio has seen slightly higher volatility at 11.1% versus 9.9% for the benchmark. It's also seen a slightly higher max drawdown at minus 16.07% versus the benchmark's minus 13.73%. And the Invesco portfolio has also seen a smaller Sharpe ratio of 0.87 versus the benchmark's 1.26. Now, we've already looked at some of the holdings benchmarking, so I'm going to skip that tab and go over to asset classes and markets, where we can see just under 95% allocation in equities, as we'd expect, and just under 5% in cash. Though we are noting quite a concentrated amount in the US with just under 44% in US allocation, and we've also got just under 20% invested in the UK with just under 5% in Japan as well. So for something that said it's globally diversified, yes, that is true, but that does come with high concentrations in both the US as well as the UK. Mainly investing in large cap as well, with just over 70% in large cap, with just under 20% in small cap and just under 10% in mid. But let's look now to sectors to see what this portfolio is really invested in and how this compares to its benchmark. So I note overweights in industrials as well as financials and consumer discretionary, though that overweight in financials may actually be due to that just under 20% allocation in the UK, is what I would say, against the benchmark's exposure to the UK. But let's continue now. Let's go over to alpha and factor exposures, where from the time period we see here, from Jan 2024, overall there seems to be consistent negative equity factor exposure to the momentum and quality factors, is what I would note for this particular portfolio. And in regards to risk sources, mainly attributed to the MSCI All Country World Index, as we'd expect. But let's go over now to alpha attribution, where we can see the cumulative alpha over the last just over 3 years has been 8.61% for Invesco, with an alpha consistency of 2 out of the last 3 years. So nice to see, of course. 2025, we saw alpha at 5.1%, negative last year, minus 0.8%, and positive the year before, 3.9%. Though whilst we're seeing positive alpha, we can still see a actual underperformance against the portfolio's benchmark. So that's one thing I would note for that. But let's move over to holdings analysis, where if you wanted to, we can compare the underlying holdings betas against equities, bonds, commodities, the US dollar, as well as other factors shown as well. But I'm going to continue this analysis. Let's head over to risk. We can look at risk and return contribution of those underlying funds. But one thing that's going to be quite important, I think, to initially have a look at is actually drawdowns, how this portfolio compares against its benchmark in periods of drawdown. Now, based on actual returns, it's been quite similar, is what I would say. Though more recently, off actual returns data, we can see slightly higher drawdown in April than its benchmark, though we saw the benchmark saw a slightly higher drawdown, only by around 1% though, in October 2023. But now if we replicate returns, because we've only got such a short track record for this portfolio, let's see how this portfolio would have handled periods of stress drawdown. So for example, if we look at the global financial crisis, we can see the portfolio actually would have seen slightly more downside protection than its benchmark. So of course that's great to note, is one thing to say. Let's continue now with diversification, just to look at this diversification score effectively. So a diversification score of 61, certainly a higher score than I've seen with some of the other portfolios that I've analysed. So that's fantastic to see, of course. But let's look now at fee reduction. How can we replace these multiple underlying holdings with cheaper peers? This is how we're able to do it. We show which funds, and you can also go over to the fund analyzer to see how those funds compare. And then with that, we're actually able to optimize this portfolio and save OCF from 0.55% to 0.07%, which actually also saw a slightly higher performance in comparison to the Invesco Managed Adventurous Growth portfolio as well. Let's look now to return prediction, which based off of the capital market assumptions of major providers such as BlackRock, JP Morgan, Invesco, Vanguard, etc., we're able to estimate the expected annualized return for the next 10 years of this portfolio. So off a pessimistic case scenario, we can see 0.48% versus 2.88% versus the benchmark, a base case of 4.48% versus the benchmark 5.46%, and an optimistic case of 8.29% versus the benchmark 8.49%. Again, these of course will be wrong, is what I would say, can be wrong. These are merely just meant as a sort of forecasting to give an idea of what you can expect the portfolio's returns to be, but they're in no way a guarantee whatsoever. But let's look now at portfolio simplification. As mentioned, we've got quite a few holdings here. How can we actually simplify that? Well, we can simplify it with just the three securities shown here. And we can see some of the other metrics, how this simplified portfolio compares against the Invesco Managed Adventurous Growth portfolio. Now we can see this simplified portfolio would have actually slightly underperformed against the portfolio. Though if we head back over to overview, portfolio benchmarking, probably the best simplified version of this portfolio, I would say, would be that Benchmark UK Global 80/20 aggressive portfolio, which, as mentioned, is comprised of 80% MSCI World and 20% UK gilts. Now, this has returned a higher CAGR, as well as lower fees. So what's not to like is what I would probably say on that. And that also brings me to the conclusion of this analysis and our final portfolio review of the year. So as always, I do hope you found it helpful and informative. And if there are any funds or portfolios you would like me to review in the new year, please do leave them in the comments below. But other than that, please do like, subscribe, and we'll see you all in the new year. Thanks all.